Good evening, everybody. Greetings for the day. And thank you indeed for sparing your valuable time to attend this Fedai annual convention, the 7th year in a row. To begin the proceedings, may I request our chairman, Shri Sahni, to escort Shri Swaminathan, Honorable Deputy Governor, Reserve Bank of India, to the dais. And if I may request Mr. Ashutosh Rena, our additional vice chairman, to please join them on the dais and also welcome respected Deputy Governor with a bouquet of flowers. And I'm indeed very much pleased, excited to have the presence of so many luminaries over here in the hall today. And if I may request my Deputy Chief Executive, Mr. Srinivasan, please honor and welcome the guests, beginning with Mr. Vinay Tonse with a bouquet of flowers, Managing Director, State Bank of India. Please welcome, I'm happy to welcome Mr. P.D. Singh from JP Morgan. And if I may request Mr. Venkat Nageshwar, please accept our greetings. And may I request Mr. Jena to please oblige us for that. Thank you very much. Thank you everybody for making it here today. Though I was a little concerned being a weekday, how is it going to work it out, but I'm really excited and happy to see the presence of so many senior like-minded professionals over here today is a source of immense pleasure and encouragement for all of us at Fedai. And it's also a strong indication of your quest for knowledge, sharing, networking, and also the zeal for the market development. We do believe such events help build mutual trust and transparency, which are the key requirements to stay competitive in this ever-evolving world of international trade and finance. The Fedai Annual Day, the 7th annual run that we have organized today, is a niche forum where members can come together to share, discuss, and listen to eminent personalities on topics pertinent to current state of markets and our economy. Since its inception in 2016, this event has had a long and colorful journey and has witnessed participation from very senior officials from Reserve Bank of India, leading financial institutions, and other industry bodies. Rich content and intense deliberations have been the key factor of each of our annual convention. So today, to formally begin the proceedings for the day, I would now request Mr. Sahni, Chairman, Foreign Exchange Dealers Association of India, to deliver his welcome address. Over to you, sir.
Thank you, Sidwani Saab. Welcome to all of you, sir, respected Deputy Governor Shri Swaminathan, sir, all the dignitaries which are present over here. I would take all my time if I start naming them, so I'll just use that. It's my proud privilege and pleasure to welcome all of you to the 7th conference which we are having for Fedai. This has become an annual function for us, and we are really proud that we have been blessed by having eminent speakers from RBI and from other luminaries to discuss the happenings in the markets with us. So we are really proud to have Mr. J. Swaminathan, who is the Deputy Governor, Reserve Bank of India, with us today. Now I'll tell something about the what Foreign Exchange Dealers Association of India, that is Fedai, does. Today we have exactly 100 members. So just century we have, including 12 public sector banks, 43 foreign banks, 24 private banks and cooperatives and other bodies, including CCIL, 21. And the major functions which Fedai does, which is, we are a very actually active association, is some kind of guidelines and rules are also framed by Fedai to help in the smooth conduct of the forex markets in this country. Again, a training, which is a very important function done by Fedai. Lot of training programs every month. We have at least one program, sometimes more than that, sometimes in hybrid mode, sometimes physically and sometimes also virtually, to train the staff of all members who are engaged in, from the banking fraternity, engaged in trade finance as well as forex activities. The accreditation of forex brokers is also done by Fedai. So this is one of the job which has been given to Fedai. Advising, assisting member banks in settling issues, matters in their dealings. This is some kind of a determination committee which helps resolve some of the issues which comes within the members. We also represent the member banks in our interactions with Government of India, Reserve Bank of India and the other bodies, collectively as a voice for all the foreign dealers of the country. And the next one is announcement of daily and periodical rates, like RALU rates, other rates, which are very important for valuation purpose, other purposes for forex markets are being done by them. Now this, it was incorporated under section 25 of the Companies Act 1956. And this Fedai was set up in 1958, so it's having quite a long history. And it started as an association of banks dealing in foreign exchange. That time, it was started as a self-regulatory body, but now new guidelines have come, so we'll be abiding by those also, and we'll be expected to abide by those as well. Now again, due to continuing integration of the global financial markets and increased pace of deregulation, the role of organizations like Fedai has become extremely important. So we remember now the number of meetings, the technical committee meetings, the other meetings, the management committee meetings have become more frequent. Issues are discussed in a much greater detail now. And collectively we come out with some kind of solutions. Sometimes we go back to RBI, give our suggestions, and more often than not, these suggestions are considered by RBI and if found feasible, they are being implemented also. Now, Fedai also plays a catalytic role in smooth functioning of markets, and we also coordinate with other organizations like FIMDA. We are blessed to have the CEO FIMDA, the chairman FIMDA also here. We also work together with Forex Association of India. We work very closely. Now, CCIL has become a member. The first time I think we are having a conference after CCIL is a member, so we are proud to have Jana sir over here. They are always part of the management committee. They also give us suggestions. And other bodies like FIBIL, in fact, one of the promoters of Fedai is also one of the promoters of FIBIL. So therefore, we play a good part in this. Apart from that, we also try to create innovation in areas like new customized products after getting the feedback from various member banks, which includes, as you rightly I said, 43 foreign banks are there. They bring in the best practices, including the Indian global banks which have presence overseas. So those kind of products are also developed. And we also have benchmarking against international standards on accounting. So all these things are discussed by Fedai, and the meetings have become actually, let me tell you, sometimes 1 hour meeting stretches to even 2 hours or more. So this is the kind of efforts which is being put in. Within that framework, we feel that it is the right time for India, the path towards becoming a developed economy. We are already on the way to become the third largest economy in the world. So the forex markets, and it cannot happen unless we are tightly integrated with the global markets. So therefore, the role of Fedai, as we believe, has become even more important and very valuable. Towards that extent, we have also started, we have become a member of Forex Global Code of Conducts. And this is something, the new initiative at the behest of RBI we have started. In fact, the subsidiary has also been established towards that extent to also the code of conduct to be percolated among all the corporates as well as the member banks to be followed for orderly, smooth conduct of the market operations. So these are the other things we have started doing. I wouldn't want to take much more time and stand between the keynote speaker today. So I once again take this opportunity to welcome all of you. Let us have a very good conference. Take the feedback from or take the pearls of wisdom from Swaminathan sir. And thank you very much. And once again, I welcome all of you. Thank you.
Thank you, sir, for your good words and welcoming our dignitaries and the participants. And dear participants, it's my pleasure to invite our distinguished guest for the day and keynote speaker, Shri Swaminathan, Honorable Deputy Governor, Reserve Bank of India. Before the address, it's also my privilege to share with you a few highlights about Honorable Deputy Governor's illustrious career as a distinguished banker and a regulator now. Shri Swaminathan was appointed as Deputy Governor of Reserve Bank of India in June 23, where his current responsibilities include supervision, financial inclusion and development, consumer education and protection. As a career banker from State Bank of India, which is India's largest bank, he had an illustrious career spanning over 34 years, both in India and overseas. Mr. Swaminathan has held various assignments across corporate and international banking, retail and digital banking, finance and assurance functions. As Managing Director, his assignment before coming over to RBI, he oversaw large corporate and commercial credit business of the bank along with the non-banking subsidiaries of State Bank of India and regional rural banks sponsored by the State Bank of India. In his immediately preceding assignment, Mr. Swaminathan was in charge of the stressed assets management vertical, risk management functions and regulatory compliance. Apart from serving as SBI's nominee on the board of various organizations, he also chaired the advisory group to the Regulations Review Authority, what we normally know as RRA 2.0 of Reserve Bank of India. So I think we are really feeling privileged today to have such an all-round banker and a personality over here. And Mr. Swaminathan has an executive MBA from National Institute of Business Management. He is a certified associate of Indian Institute of Bankers, certified documentary credit specialist, certified anti-money laundering specialist. I don't think we need any more degrees or associations to know about the person. I'm really happy to have you with us today here, sir. Thanks for joining us today. And without spending much time, I would like to invite you to share your views, thoughts with the members. Over to you, sir.
Distinguished guests, ladies and gentlemen, a very good evening to all of you. I think I will also follow the path of Mr. Samir Sani of saying the distinguished guest because with all the luminaries seated here, if I were to read out all of them, I think I intended to do, but then that probably will take 5 minutes of my 20-minute speech. So I will borrow the idea of Samir and then stay with this distinguished guest. But it's a real proud privilege to be here, and also Sindhwani Sahab, thank you. Thanks for this invite as well as your kind introduction. It's a great honor to speak to this August gathering on Fedai's annual day. Thank you very much. And as briefly mentioned by the chair, through the tireless efforts clarifying the complexities of interbank foreign exchange business and serving as a crucial voice with the regulators, Fedai has played a pivotal role in shaping the rules of foreign exchange business in India. So when Ms. Sindhwani, the Chief Executive, requested my presence here, I couldn't say no. I must actually thank you. I couldn't miss this an opportunity. As we celebrate Fedai's achievements, it is also an opportune moment to reflect on the broader vision for India's economic future. In 2022, as our nation commemorated 75 years of independence, the Honorable Prime Minister outlined 5 key resolves, as you would recall, 5 key resolves for the country, one of which was the ambitious goal of transforming India into a developed nation by 2047. And as alluded to by Samir, realizing this vision will require a unified effort across all sectors, with micro, small, and medium enterprises playing a pivotal role in driving economic output and boosting exports. MSMEs, because since that is the topic given to me today, I'm picking out from the vision of the vision as laid out by the Prime Minister. I'm picking out that one particular branch because that's the topic of my speech today. And MSMEs, oftentimes we say it's the backbone of the Indian economy. We also know that it holds immense potential to become, some of them hold immense potential to become national champions. A potential that remains largely untapped for various reasons. With that in mind, I've chosen this theme, local to global, and what could be the role that the financial sector can play, because we have, taking advantage of this audience, I thought maybe I can briefly list out the challenges that they face and then as to what the financial sector can do. So with a vast network of approximately 63 million units, MSMEs contribute nearly 1/3 of the nation's GDP and account for about 40% of the manufacturing output. That's the significance of this particular sector. 1/3 of the nation's GDP and 40% of the manufacturing output. More importantly, it's the MSME sector's ability to foster entrepreneurship and create substantial employment opportunities, the key factors in realizing India's demographic dividend. Additionally, as critical ancillary units, MSMEs support larger industries and significantly contribute to the secondary and tertiary sectors as well. With millions of jobs generated, the MSME sector stands as one of the most significant sources of employment in India, underscoring its importance in sustaining livelihoods and driving inclusive growth. The MSME sector's impact extends beyond domestic boundaries. In the realm of international trade, these enterprises have proven their competitiveness, contributing more than 40% to India's exports. This growing presence in global markets reflects the increasing acceptance and demand for Indian MSME products and services, positioning the sector as a key player in enhancing India's global economic footprint. Despite these achievements, the sector faces significant challenges, notably the issue of the missing middle. While micro enterprises make up most of the MSME employment, they often struggle to transition into small or medium-sized firms. This limitation hampers their ability to achieve economies of scale, invest in fixed assets, and adopt innovative technologies. So in my address today, I will focus on these challenges and explore how the financial sector can play a crucial role in addressing them, thereby supporting the growth and development of the MSME into larger corporations. So let me discuss a few challenges very briefly, because I'm sure that most of you are aware of this. So I will limit myself to briefly stating 4 key issues. The first issue is access to affordable finance. I'm saying this access to affordable finance because with humongous efforts taken by all of you, access is no longer a problem. So I'm presuming that access is something which is available. So I thought I would put this issue as access to affordable finance. So all of us agree that credit is crucial for the growth of MSMEs, and affordable funds can boost their competitiveness. Because when we talk of global scale, competitiveness is essential. Banks often use asset-based lending. Most of us are comfortable doing asset-based lending. It, as you would know, relies on collateral rather than cash flow. However, many MSMEs lack adequate assets for collateralization, particularly for working capital needs, often leaving smaller businesses excluded from the funding opportunities from the formal banking sector. Further, as many MSMEs mainly operate in the informal space, assessing their creditworthiness can be difficult due to the information asymmetry that prevails, particularly with respect to the financial performance of their businesses. Although initiatives like GST and digital payments aim to facilitate higher digitization among MSMEs, the adoption of formal digital documentation methods remains limited, which impedes an efficient credit underwriting process. The second area is delayed payments. MSMEs commonly encounter a persistent issue of delayed payments, whether it is domestic receivables or export receivables. We have seen that. The delay in receiving payments prolongs their operating cycle and diminishes their capacity to fulfill existing order or secure new ones. Despite the existence of statutory provisions which entail penalties for delayed payments by buyers, MSMEs often refrain from invoking these provisions. Their reluctance, as you would know, stems from a combination of weak bargaining power and also the fear of losing future business. The third, of course, is the infrastructure bottlenecks that they face. Despite various attempts to enhance the infrastructure, MSME clusters, especially the micro enterprises, lack vital support systems. This deficiency not only obstructs their day-to-day operations but also hinders their future growth potential. Developing MSME clusters can provide shared infrastructure, services, and access to larger markets, which can significantly enhance their growth potential. The fourth, of course, is the requirements of compliance. As businesses transition from an informal to a formal entity, they encounter significant rise in regulatory obligations and cost of compliance. Sometimes these requirements involve the interpretation of laws, knowledge of compliance procedures, etc. Instances of difficulties with financing entities are not uncommon as the MSMEs attempt to scale up. The government and regulators have been taking various initiatives to reduce the difficulties and ease the cost of doing business. So, having listed out these 3-4 major challenges, of course there could be many more, but I thought maybe these 3-4 I will park in the interest of time. I would go to what probably as financial sector participants that we can do. That is to take advantage of the larger audience from the financial sector here. I thought this could be an appropriate forum in which maybe I can place this. The number one I would say is in terms of digitization and adopting innovative financing solutions. With more MSMEs adopting digital payment systems, mobile banking and online banking or accounting tools, the resultant digital footprint allows financial institutions to gather more accurate and comprehensive data on the MSME's financial health, transaction history, and also their cash flow patterns. As compared to maybe a few years ago, the digital footprint is helping us to determine these items without, of course, relying on the manual paperwork. We have seen significant traction towards the end-to-end digitalization of credit delivery in the past few years from the banks, largely in retail and to some extent in the MSME sector. I would urge bankers to explore these opportunities further for greater digitalization of their transactions with MSMEs, be it in product or services. Digital applications and platforms reduce the paperwork and administrative burden associated with the traditional lending and also brings in complete transparency. This is something which can transform the way in which the business is being done. By using digital tools for application processing, verification, and disbursement, financial institutions can expedite approval times and significantly lower the cost of availing credit. The data derived from the enlarged digital footprint would enable a better risk assessment and the development of customized financing products. Indeed, extending finance after a proper understanding of the cash flow of MSMEs, including factoring in the possible delayed payments from their buyers, will ensure a proper reading of the actual working capital cycle and ensure adequate financing. Inadequate understanding of the actual cash flows and its timings may result in the repayment schedule not keeping up with the reality. So, the digital footprint today can help us make a more realistic assessment of their cash flow and its timings, and thereby helping us in fixing realistic repayment schedules. On its part, RBI has been taking various initiatives to promote innovation in financing to MSMEs. Recently, the third cohort of the RBI regulatory sandbox, I'm sure most of you would be familiar with the sandboxes that RBI runs. This was dedicated for MSME lending, where 5 ideas were found viable. Earlier, to address the issue of delayed payments to MSMEs, RBI initiated the trade receivables discounting system, TREDS, as I'm sure every one of you are familiar today. This was introduced almost 10 years ago in 2014. It's completing a decade. The scheme facilitates the financing of trade receivables of MSMEs from corporate and other buyers, including government departments and public sector undertakings, through the multiple financiers electronically. While there has been an uptick in transactions in the last couple of years, we have seen significant traction in the last couple of years, there's a long way to go in onboarding by more corporate buyers and MSMEs, MSME sellers on the platform to reap its full potential. RBI is engaging with the government on this aspect. We also use the standing forums on MSMEs where all the stakeholders participate. But I would also urge the bankers to leverage their corporate relationships to encourage larger corporates to get themselves onboarded on the TREDS platform. This will bring a significant volume to the platform. The third is, of course, capacity building and financial literacy. Apart from access to finance and digital tools, enhancing financial literacy among the MSMEs is equally important. Many small business owners lack the knowledge and skills to effectively manage their finances, which can hinder their growth. While RBI has been facilitating capacity building on MSME finance for bankers under the NAMCAP program, I believe the financial sector can play a vital role in providing capacity building programs tailored to the needs of the MSMEs. These programs could include training on financial management, understanding credit and forex products, and using digital tools effectively. By equipping MSMEs with the right knowledge and skills, we can help them make informed financial decisions, optimize their operations, and reduce the risk of default. Partnerships between financial institutions, government agencies, and the industry bodies can ensure that these capacity building initiatives reach the businesses that need them the most. As you may be aware, the Government of India has adopted the cluster development approach as a key strategy for enhancing the productivity and competitiveness, as well as capacity building of micro and small enterprises. In this connection, RBI advised the conveners of all state-level bankers committee to incorporate credit requirements of these identified clusters in their annual credit plans. To further support this initiative, I would request banks to consider opening more MSME-focused branch offices, preferably with forex facility, within these clusters. These specialized branches will not only facilitate easier access to credit for MSMEs, but will also serve as counseling centers, offering tailored financial advice and capacity building service to those enterprises. The next is in terms of boosting the MSME exports. The financial sector can play a crucial role in boosting MSME exports by offering targeted support and tailored services that address the unique challenges these businesses face in the global market. Beyond traditional products like pre- and post-shipment finance, factoring and invoice discounting, the sector can significantly aid MSMEs in managing risks through export credit insurance and currency risk hedging solutions. These financial instruments not only protect against payment defaults and currency fluctuations, but also provide MSMEs with the confidence to explore and expand into new international markets. So the current regulations mandate that forex needs, including cash and hedging products, must be met through authorized dealers, with scheduled commercial banks playing a dominant role. These banks, holding a privileged position, have a fiduciary duty to act fairly and transparently, particularly with smaller clients like MSMEs. The introduction of the FX retail platform in 2019 aimed to enhance transparency and fairness in retail foreign exchange transactions has seen only a limited success. I would request banks to take proactive steps to increase awareness and facilitate higher customer participation on the FX retail platform. And if there are any feedback to us as regulators to enhance this participation, we'll be happy to consider that feedback that may come from industry body like yours. Ultimately, it is important that we make these platforms successful. The last aspect probably I would like to park with the bankers is considering the key role that MSMEs play in the economy. The financial sector should adopt a more sensitive and empathetic approach towards them. While financial discipline is crucial, no doubt, we are not hinting at any relaxation on that. Financial discipline is certainly crucial. The unique challenges faced by MSMEs, such as low capital base, lack of scale, cash flow constraints from delayed payments, fluctuating market conditions, both domestic and international, and external economic pressures and geopolitical tensions necessitate a more nuanced approach to assessment as well as follow-up. While timely repayment of dues is crucial to maintain the health of the financial system, financial institutions should focus on deploying supportive measures such as restructuring options, grace periods, and tailored repayment plans that give MSMEs the breathing space they need to recover and get back on track while encountering difficult situations. This requires an empathetic approach. Collaboration and dialogue between the lenders and borrowers can help create solutions that protect both the financial interest of the lender and also the viability of the MSMEs. So that's a purpose. So in conclusion, the journey of India's economic transformation cannot be complete without the robust development of our MSME sector. So MSMEs are not just the backbone of our economy, they are the engines of growth, innovation and employment. However, for these enterprises to truly thrive and scale up, the financial sector must step up innovative solutions, have sensitivity and a forward-looking approach. This is not just about providing credit, it's about enabling these enterprises to compete globally, drive exports, and contribute to the nation's goal of becoming a developed economy by 2047. While financial instruments and support mechanisms are crucial, the way we engage with the MSME sector, our sensitivity to their challenges and our commitment to their success will ultimately determine the strength and sustainability of this partnership. So with this, I thank Fedai for inviting me and wish it continued success in its role as a catalyst for the smooth functioning of the foreign exchange markets through close coordination with all stakeholders. Once again, thank you for all your attention. Good.
Thank you, sir, for the engaging and thought-provoking address. And the four key issues, as you mentioned, that affordable finance, digital journey, transition from informal to formal, I think these are the key areas which market is well aware of, and I think already in the forex world and the international trade world, a lot of efforts are already being done to move towards more digital space, moving from paper trade transactions to the digital trade transactions. And you also made a reference to the trades. Today, if I look at India domestically, we have got all the resources, all the technology, because all pure domestic trade is practically fully digitized. What needs to be done is how we can transfer this knowledge, this skill set to the cross-border and the international trade. And I'm sure with the kind of support, the guidance which we are getting from Reserve Bank of India, Government of India, we should be able to make it. There is no reason why we can't make it. And thank you very much for your valuable inputs. And now moving forward, friends, I'm really delighted to announce a very brief yet significant sub-event of today's proceedings, for which few of us have really worked really hard and have been anxiously waiting with bated breath. As you know, at the instance of Reserve Bank of India, a step towards capacity building, one of the key area for development which respected DG mentioned in his speech, Fedai in 2016 started conducted a certification exam jointly with the Indian Institute of Banking and Finance for a certificate course in foreign exchange. And today at this forum, let's take this moment to acknowledge and applaud the dedication, perseverance, and talent of our colleagues who not just cleared but scored highly in these exams. And we use this forum to felicitate, acknowledge, and reward some of the high scorers in this exam. And may I request respected Deputy Governor to please hand over the trophies as a token of appreciation to the winners. I'm happy to announce the names of the top scorers in Fedai's certificate course in foreign exchange examination conducted during the year 22-23 and 23-24. For the year 23-24, we have got the top scorer, Ms. Prachi Tripathi from HSBC Bank. Unfortunately, Ms. Prachi has not been able to make it. She has requested that her trophy may please be handed over to Ms. Manisha, her colleague from HSBC. So I'll request Manisha to please come forward. Thank you. The next one is Ms. Kushbu Jain from HDFC Bank. She is from Ajmer. She has not been able to make it. So I'll request anybody from HDFC Bank to please come forward and please do the honors. And Ashutosh, if you can stay back. Mr. Manoj Kumar Sani, again from HDFC Bank, from Kota. The winners for the year 22-23 are Mr. Amol Raghunath Kulkarni from Canara Bank. Now, once again, Ms. Manisha Ajay Shinde from HSBC Bank, now on her own behalf, winner for the year 22-23. And last but not the least, Mr. Chandan Kumar Saha from State Bank of India, Calcutta. Mr. Saha has not been able to make it today, so I'll request somebody from State Bank to please come forward. Good. The chairman receiving trophy on behalf of the country. And sir, if you can stay back for a moment. And hearty congratulations to each of you, and may you continue doing better in your lives and careers going forward. Congratulations once again. So may I request our chairman, Shri Samir Sani, to please hand over a token of our love and affection to respected Deputy Governor from Fedai, all members of the Fedai, please. Now moving on to the next part of our program today, I now invite Mr. Neil Schonhard, Chief Executive Officer from Montego, for a short presentation on fraud risk management, secure financing solutions to manage the risk of duplicate financing for trade in India. Welcome, Sean.
Thank you. Esteemed colleagues, guests, friends, award winners, thank you for having me, Mr. Sindawani, particularly for the invitation. I've decided, much to my colleagues' disgust, to throw away the presentation. I think I'd rather tell you a quick story about following in the Honourable Deputy Governor's footsteps of local to global and then back to India again. I'm going to tell you a quick story about a company that in 2017 wrote a white paper for IDRBT in partnership with the RBI to talk about the benefits of blockchain, digitalization of trade, cost and workflow efficiencies that could be had from the use of nascent technologies. That white paper, quite long and onerous actually, but was very informative and back then very pioneering. And around the same time, when the TREDS exchanges were just getting going, which we're all obviously very familiar with, the problem of fraud in trade was sort of becoming more prominent, and the idea of tackling it head-on with nascent technologies. And so the RBI, pioneering and agile and innovative as they are, invited a company to build and deploy a technology that would use blockchain to compare and contrast transactions in a privacy-preserving manner against one another. And so the offering of secure financing, a technology that made fingerprints of transactions and compared them against each other, was born. And so too it was deployed in March 2018. So successful was the deployment of this technology that it caught the eye of Kiran and Swift India, and at that point, bearing in mind this was the first time blockchain had ever been used in trade finance, this company, getting a greater sort of foothold on the India market, signed a deal with Swift, and this was the first time a company had ever worked with Swift as a third-party vendor to deploy that solution, or Swift to resell that same technology to banks here in India. Some time later, Swift Global, somewhat falling behind market, lacking innovation at the time, around 2019 into 2020, decided to terminate the then CEO's role and bring in someone else. Swift Global ran around the world, and Swift India put forward this company that I represent and stand here today to represent. And they spoke to Google and Amazon and Microsoft and PwC and Boston Consulting Group and Swift India, Swift UK, Swift Germany. And many companies' names were put in the hat, and Swift India, thank you to them, put our company's name in the hat too. And up against dozens of companies, most, in fact, all much larger than ours, were put into a vetting process. And this is innovative companies that we went up against across securities, treasuries, FX, messaging, and of course trade. And eventually, after a very long and painful vetting process, this company was selected to be the first ever fintech partner of Swift, to build and deploy, architect a global version of the India architecture, to build a registry, as we sort of generalize, in partnership with SWIFT. So what does that mean? The technology that we used in India, whilst very innovative, wasn't scalable. And of course, invoices being the most used document in trade, but not the only one. So a global version, much cheaper, both cross-document and cross-border in nature, was developed, architected and deployed, and over 50 of the world's biggest trade finance banks to date have augmented that solution. This company, Monetigo, now is having great success, all from our beginning here in India, right here in Mumbai actually. And to talk of where this narrative goes now, SWIFT built and deployed a global registry, a global standard for fraud prevention, or a gold standard as I often say. And now these registries, factoring companies call them receivables recording centers, other people just call them registries, are becoming a very hot topic across the world. Singapore's deployed one. 47 banks in Singapore alone use our technology. Many of you in this room are actually using our technology there. Saudi's deploying our technology. We're speaking to over 24 central banks around the world, or government agencies, associations of banks, and other governmental bodies. And so, largely down to the MSME and SME empowerment and financial inclusion that comes with de-risking those that need the financing the most, we have seen or attracted much attention from multilateral banks. ADB are working with us in several jurisdictions around Asia. We're working with some emerging markets in the Pacific. We're working with Islamic Bank, we're working with Afrexim, EBRD, and many more. One multilateral bank is even prospecting building a registry for an entire continent. And all of this, again, started here, just down the road, actually. And so what does this mean? What are we preventing? Duplicate financing is a very broad term. Of course, that's the reuse of the same underlying collateral or invoice to multiple lenders, but actually there's much more to it than that. The solution itself prevents multiple types of fraud, tampering of documents and so on. And just to give you some statistics, last year, so financial year, calendar year in the UK, 23 to end of 23, there was a series of technology providers to the biggest banks in Europe, Credit Agricole in Texas, BNP, Santander, Lloyds, and many, many more. To give you an extent of the reach of this survey, 90% of all monies extended in the UK was lent by the people that participated in this survey. And here's the statistics. Double funding in France, 16% of all lenders in 23 lost money. Spain, 18%. Germany, 34%. UK, 37%. We come over to Asia Pacific, where we're working with the ASEAN Secretariat and the Asian Development Bank. And in Indonesia, that number's at 87%. In Turkey, they have a very rudimentary registry that's been in place for 6 years. It's compulsory to use it. You cannot finance an invoice in Turkey without putting it into this registry. And every year, year on year, 8% of all transactions financed in Turkey are double funding. So this is a problem that it's more than a problem. This is something that's endemic. And so we come back to India. Ketan, Prakash, Sandeep, the guys at Treads we're very friendly with, of course, they've had great success. And a large part of that is down to the fact that it's underpinned by our technology above and between those exchanges. And so too, I come here now to speak to you, the banks here in India, to tell you that you have a problem that you're not addressing. There is no way that there is not double funding and other fraud typologies that you're not addressing. And the good thing for you guys is our infrastructure's here, live and already paid for, so you can turn it on straight away. The largest trade finance bank in the world, the global head of risk and compliance, doesn't see our company or our technology as a risk mitigation tool, but actually as a revenue generation tool. Why? De-risk SME and MSME financing, and you open up a great deal of increased risk appetite and, of course, profit, whilst having a financial inclusion and economic growth narrative to your business. So what's not to love there? All of these governments, central banks, multilateral banks can't be wrong, and of course, we've never not found fraud, and we know it would be here. So here I am, in more of a call to action than a sales pitch, if you will, as we try to come back to home, where we started. I represent this business that's now global in nature, and a third of our global workforce is based here in Bombay. Please be responsive. I don't expect everybody to sign up, but it is free to trial, and we already have some of the banks in this room participating in that proof of value. If we don't find fraud, don't worry, walk away. But what I would say is that all the other banks in the world and all the other governments deploying registries can't be wrong. And all of that started here, and we all champion what we began here in India. And speaking to IFC and ADB and EBRD in 2 weeks, I'm speaking about registries as the only effective tool as a foundation to encourage SME and MSME financing at the World Trade Organization's yearly event. And I talk about it all starting here in India. So use it. Save money, lend more, make more money. That 2 trillion export number by 2030, you're not going to be able to get there if you don't prevent fraud. It's sort of a speculate to accumulate game, I would imagine. So that's it. Apologies for deleting the slides, Goreng. I just thought it was better just to tell a story. Thank you very much, everyone.
Thanks, Neil, for that sweet and short introduction and helping us realize the kind of risk which we are there, how technology can help us manage the things better. And I think there is no denying that technology today we are going through the phase that many things which can be done much better, much more efficiently the way we are doing instead of doing the traditional way by using the latest technology in whatever form we can do, of course. We at Fedai also have been making some efforts to move in that direction, obviously not talking about the blockchain and such complex things. At our level, with the limited resources and the availability, we have developed a platform which I would like to just give a brief introduction about that. What we have developed over here is the platform named Fedai Quest. This is developed to help and empower the frontline staff by providing them access to the right source of information, knowledge base, overcoming the difficulties of accessing the reliable information in real time. As Sir mentioned in the speech also, that capacity building and the people at the front line, they need to have the resources and capability to be in a position to take the right decision at the right time so that the information can be made available to them. We are trying to bridge the knowledge gap with easy access to the regulations, guidelines to minimize the chances of mistakes, improving client turnaround time and overall efficiency. The chatbot is designed to assist based on the documents information ingested in the system. So this is not going and scanning, doing from the Google search kind of thing, which can get the unreliable or unauthenticated information. The system is all ingested with the information from our own systems, our own bases. With that ingested information, this hopefully is going to be the system which will be able to answer the simple queries for areas pertaining to foreign exchange and trade. Just fingers crossed, I'm trying to give a live presentation. This is the live system which we are having. Let's have 1 or 2 questions, ask system the questions and see what kind of answers it throws. This is the sign-in thing, onboarding, live we are going to have it over here. Usual disclaimers and other things. We go to the chatbot. Here, ask me anything. We type in a question over there. Let's do something regarding the questions which usually come to the people's mind for that mandatory hedging requirements, etc. Mandatory hedging requirements. What are the mandatory hedging ECB requirements for companies in the infrastructure? We know there are all regulations about these things. So let's see what answer based on the information which is available. This is the answer, live answer this is throwing right now. Infrastructure space companies are required to have a broad approved risk management policy, mandatory hedging requirements, 70% and other things. So this is the kind of thing which we have developed with the help of local resources. Let's try something on that, maybe trade related. Two areas, international trade and the foreign exchange market. These are the two areas which Fedai is involved in. These are the two areas which we have tried to build in over here. This is the live we are having over here, but after that the system is going to be here available. What I'll request you during that dinner and drinks, please come over, try the system, ask it the questions and see what kind of answers it gives. Your free, frank feedback will really help us improvise upon it and do it better. So this is one thing which we have developed. I'm sure that a lot more can be done on this. This is right now the very basic version. We are trying to build it up more on that by adding more and more information onto this, trying to build in some kind of crawlers into the system so that it can go to the well authentic sites and seek the information, latest updated information, and can produce the result. Of course, with the passage of time, we'll have to take care of the response time and other things which we are all ready to spend time on this. So I'll request you all to please spend time. It's going to be available over here. You can ask the question, live situation, and see what kind of answers it's giving. Would like to have your feedback on this. With this, ladies and gentlemen, we come to the final part of our session, today's program, and I move on to for the customary vote of thanks. To do the honors, may I request Mr. Ashutosh Raina, Additional Vice Chairperson from Fedai, to propose a vote of thanks. Welcome, sir.
Respected Mr. Swaminathan, distinguished dignitaries and all my friends, I take this privilege to present a vote of thanks. I'll extend a very heartfelt thanks to everybody who has contributed in making this Fedai annual day a success. First and foremost, I'd like to thank Mr. Swaminathan for his very much insights into the MSME sector, which is the backbone of our economy. I also thank all other dignitaries, Mr. Vinay Tonse, Mr. Sunil Mehta, Mr. Venkat Nagesh Chalani, Mr. Hare Krishna Jaina, Shri G. Ravindranathan, Mr. Vivek Agarwal, Mr. Bishwakanti Das, Mr. Bishwaketan Das, Shri P.D. Singh, Shri Darayus Parvez Bajaj, and our sponsors, Monterago. A special thanks to Fedai and Fedai CEO and the staff who worked tirelessly behind the scenes to ensure that everything ran smoothly today. Last but not the least, thank you to all of you, our attendees, who have participated with enthusiasm and have been a true driving force for this event. We hope you found it enriching and enjoyable as we intended it to be. Once again, thank you everyone for making this Fedai Annual Day a memorable event. And I request everybody to join us for drinks and dinner. Thank you. Thank you, everybody. Have a wonderful evening.